The world of digital assets and cryptocurrency is never short of the headlines, but the past few days have seen major global developments that stretch from the mountains of Switzerland to the corridors of power on Capitol Hill and Wall Street. Joining me is Rubicon Digital Assets CEO and NYU professor, our friend Greg Johnson, to share his insights into some major news in the crypto world. Greg, thank you so much for being here. Let's first begin in Washington, D.C. with news this week concerning the Trump family's crypto business, Arabian sheiks, and what many believe are lingering questions about conflict of interest in this administration.
More and more are asking those questions, Faith. It's always good to be with you. And originally, we had planned to talk about the gold rush in crypto first. But my goodness, over the past 2 days, there's been a flood of headlines, as you just teased. And the major one now is a story that continues to follow the Trump administration into its second year. And these are concerns, growing concerns, around conflict of interest. And to be very clear for all of our listeners and viewers out there, rather, I just want to be very, very clear. Business and politics have always mixed. Families are allowed to do business when their other family members are in office and elected officials. But what we're seeing right now is challenging many assumptions for what we thought was okay with conflict of interest. And specifically, breaking news over the last couple of days, it was revealed that one of the royal family members in the United Arab Emirates, and specifically in Abu Dhabi, 4 days before the inauguration of President Trump in his second term, took a 49% stake in something called World Liberty Financial. And for viewers that have been following along with these segments, they will know that World Liberty Financial is the largest of the Trump family businesses in the world of cryptocurrency. And that is concerning because it was somewhat secretive. It's just been disclosed now. And the more we've seen entanglements with politics and favors and regulatory approvals, this is on the minds of many people. And the concerns are also causing big problem for one of the signature pieces of legislation that the Trump administration, ironically, is trying to get pushed through on Capitol Hill, a bipartisan bill that now is in jeopardy because of concerns from many on the Democratic side of the aisle that are saying, wait a second, this is just too much. If conflict of interest, we need to dig into this. And it threatens to derail this Clarity Act legislation that's right now before the Senate.
And can you talk about that Clarity Act? Can you share any new developments, especially on a story that you first brought to us last summer dealing with that epic battle between Wall Street banks and the crypto industry that we saw?
Yeah, let me define epic a little bit further if I can. Listen, the Clarity Act is signature legislation, and everybody that's concerned about the future of finance and that wants the United States to be the leader in this new future of finance subject, digital assets and cryptocurrency, we've been asking for legislation and law to come from Congress. And so both sides of the aisle have worked hard to get to the place where we are, which is in the red zone. Super Bowl week, I have to use a football analogy. But here we are at the red zone. The Senate has been going back and forth. And out of the blue, this story about the royal family in the UAE comes to bear. And what that means is that all this hard work is in a lot of jeopardy. And now, what's been going on? Last summer, we talked about the fact that the banking industry and the crypto industry were waging a titanic battle of lobbying money. Faith, more than $500 million has been spent by both sides to try and influence Congress to have this Clarity Act become more favorable from the way that they see things. And what this really boils down to is the banking side of the House is saying, we don't want crypto to be able to provide interest or reward payments on something that we've covered here in 11 Alive called stablecoins. So now that we know stablecoins are regulated, the banks are saying, wait a second, you can't allow these new crypto companies or third parties to be able to charge or give interest to customers. We're going to lose all of our deposits. And then the crypto industry is saying, now, wait a second, didn't you just 20 or 30 years ago ask for and receive major reform to the banking regulations so that you could charge interest because you were crying about it was unfair? And so this back and forth has led to, like I said, over $500 million in lobbying money spent. Just last night at the White House, a private dinner was held where the combatants from both the banking and the crypto side of the table got together. Not much was achieved. And what I will tell you is that this story is something we're watching very closely, and both of our senators are very much involved in this legislation. So it's important for all of us here in Georgia to keep an eye out because it does make a difference, actually more here in Georgia, given how much we have at stake in fintech and in the banking sector.
Yeah, and Greg, lately we've been hearing a lot about global investors driving up the price of gold to record prices. Why are some crypto companies hoarding gold in massive quantities? What's the benefit here?
Isn't it ironic, Faith? We've talked about this a little bit, the ironies that abound with this new digital assets and crypto business. And when you think about cryptocurrency, isn't it ironic that one of the largest crypto companies in the planet, in fact, the largest stable coin in the world, is a company called Tether? And recently they had to disclose for their regulatory filings that they have been acquiring gold at a record pace. How ironic that the future of finance is investing in hoarding the old world past finance of gold bullion. To put this into context, usually the largest purchasers of gold bullion every year that is mined from the ground are actually central banks from around the world. And countries go and buy up gold to put into their reserves as a nation state. And there are other private companies that own gold too, but nothing like we've seen over the last few years in what Tether has been doing. Tether is a big deal. They are already the largest stable coin in the world. And Faith, for all of the folks out there that think this doesn't matter, Tether, a stable coin, backed and tied or pegged, as we say, to the US dollar, is actually one of the top 10 largest currencies in circulation, meaning there's the US dollar, there's the peso, there's the euro, there's the Chinese currency, all of the currencies in the world. This stable coin is already in the top 10. To give you some sense, they already have acquired more than 140 tons of gold worth more than $24 billion stashed in physical mines in Switzerland. So this is an industry that continues to be ironic. The stories in some cases seem bizarre. And the reason that they're hoarding this gold is because, like any other bank or any other financial company, they have to have reserves. And this is one of the mechanisms for them to have reserves. But they're also influencing the financial and commodities markets with the price of gold. So stay tuned on that. It's been a busy week.
There's a lot of webs there. I mean, you got to really kind of follow along, but we're so grateful to have you to walk us through it all. I learned so much every time we speak with you. Greg Johnson, our Atlanta-based source for all things crypto. Thank you so much, Greg.
Great to be with you as always, Faith.